The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. And thank you to the host for a great few hours. And now we're going to continue through the rest of the day. Dow's up 213 at 16,283. The S&P, if I can just find this right here, excuse me, 1 second. The S&P is up 22 at 1915. Comp index is up 51. This is with Amazon down huge. What is Amazon down huge? I thought I had it right in front of me. I think it's down about 55, yeah. And you've got the VIX index finally into the 20.76 area. Now, what I said to my subscribers for my opening call, really important for the VIX and that by Monday or Tuesday to start to trade in the teens once again. That'll allow the upside to garner momentum. That's what we really need right now. One of the reasons why we've been so positive for my opening call subscribers, and one of the reasons why we grabbed a brand new position, a position I don't think we've had in 4 years, must be 4 years at least, in an area that has been decimated. You're talking about something that's gone from the 70s down to the 14th. This is amazing. So anyway, what we're looking for here is some upside momentum. So here we go. We're looking at the E-mini futures in a leg F in the 120-minute chart above the 200-period exponential moving average. Let me just expand this. Let me show you the importance of a moving average. In this case, it's the 200-period exponential moving average. In this case, that probably could be the simple as well, or the smooth. What we're looking at is the last time that the 120-minute chart even was touching the 200-period exponential moving average was way back in, I think it was December. Yep, there it is. December, well, it's January the 3rd. All right, just as the new year started. And what happened was at 2043 on this E-mini contract, it wasn't that contract at the time, but that's what the price was. We broke underneath that, and it's taken all this time with a move from the 2040 level, sliding all the way to the most recent low of 1804. I mean, that is huge, 200 points more. And all of a sudden, what we're looking at is a rally that's touched the 200-period exponential moving average on the 27th, pulled back, and then what did it do? It actually managed to squeak. I held the trend line support, and then it squeaked right to that level, and then pulled back sharply to the 9-period moving average, and today, pop, goes right through it. First time it's been through it since that, what did I say it was? 3rd of January. Amazing. All right, so that's a good sign, and we don't want to become ebullient here. You just want to say, good sign. Now let's go on to the next analysis. Move this away. It's a 120-minute chart in this little corner, always right there. And we're going to, and this is the daily, the weekly, the monthly. Look at the way from the 1824 low of August in the E-mini, it went out to 1804. You know what I'm going to do? Most of you are not trading or looking at this. I'll go to the S&P. S&P is making leg C like the Dow is in the daily. 1812 was the low. It touched the 200-period exponential moving average in the weekly chart exactly. And now it's had a fabulous springboard effect, and that's really important. And what does it say? That if this rally can continue, that there's just the possibility, that if we can see the S&P break into the 1931 to 33 area, and the stochastic actually goes from 23% up into the 38 to 42% area, and the MACD is just starting to turn up, that the rally can last a little bit longer. That's the issue there. Now, because I'm expecting that today gives you the candle that I call the Chapman Wave Roman candle, I've got a whole thing. I must have spent hours yesterday going through the candles that I like to see that are called the Chapman Wave inverted Roman candles, and I went through monthly charts. I couldn't tell you how many stocks, going all the way back, just all the way back, sometimes to the 1980s. I found maybe two. I only found one instance, if I can even find it here, Deere and Pfizer, where it was the low. That's how rare. And one of the reasons is to find a candle like this that's upside down at a bottom, like a bottom here. It's unusual because that would imply that you opened, let's see, it implies that you opened at the low, you screamed up, and then you gave back half that gain. Well, that's a very unusual occurrence. Usually you open at the high, scream to the bottom, and come to the top, like this candle here, or like that candle there. Okay, so I'll get to that. I hope I can get to that today because I did a lot of work on it. But let's just continue here. So you've got the comp index. Actually, I'm not even going to go to the comp index. The QQQs, most people look at the Qs. QQQs are at up 0.99 at 102.99. And the weekly chart is still fabulous because it hasn't broken down at all, not like the others. But I think that the Qs are going to have the toughest time right now because of the mix of the Qs, the way the leadership there has started to fail. Leadership, I know that it's been hard to believe, and I've been saying this for weeks now. The makeup of the Dow at this particular point, I think, is one of the best I've seen in a really long time, meaning it's going to give you the best upside action. And we will see when it starts back down again, because even on the downside, it gave you the best, still gave you the best performance. We'll see if that's the case. I had a couple of questions I want to get to, but let's just finish up here. So that's the QQQs. The IWM is up 1.91. Now, that's up even better than the Dow and the S&P, which are 1.3 and 1.2 respectively. This is up 1.9%. At 101.61. Finally, it's getting to, let me just measure that. That's 101.61, 101.59. Yep, this is leg B. I put in a minus, but that actually is not a minus. It's really an A and a B. So we're in leg B, lousy looking chart, but it's doing its best. And that monthly chart is going to be something when it closes at 4 o'clock today. Now I want to go to gold. This is the most fascinating period. One of the reasons is gold, with that little doji candle, I did a lot of work on this little tiny doji candle as well. Maybe I'll have a session. I'll try to think it through Monday and do it more comprehensively, even though today's Technical Friday, for two reasons. One is I want the start of the next month. That's always really important, so I can get a candle fix on the next month. And that concludes January decisively. There's no extension to the upside unless you start the new month immediately going higher. So we'll do that. I'll think about that as we move along today. So gold is acting very well. It's up $1.30 at 11.17. Silver is SI. Silver is up 0.05 at 14.29. You've got high-grade copper. Nice move here. It's acting very well. And all of a sudden, my $sign TRCCI, Reuters commodity index, is starting to improve a little bit, and even some of the other areas in the commodity index are working. I'll be right back. Basil Chapman.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So now we want to look at the dollar, DXY. Dollar having a stupendous movement. Stupendous. You don't want to be, it isn't stupid at all. It is a spectacular move. And all it needs to do, we spoke about this yesterday, so I was expecting there would be some kind of a move to the upside. How the gold holds in this move, because I think that they're now separated. And if I'm looking at this correctly, then you're looking at 99.80. One will start leg D. It's just I'm a tad behind. Maybe we've already hit that. So 99.81 will start leg D in the daily. But what's really interesting is I think we're going to still get that leg D at 100.52 and just go a little higher before the dollar possibly pulls back in the weekly to get that leg D. And that will extend, if it's only on Monday, that starts leg D in February this is leg D, after just a minor peak C higher from 100.39, 11 cents, 12 cents to 100.51. So I'm not expecting all that much on the upside from the under dollar. That will help gold and the other commodities, I think. That's the way I'm looking at it. Okay, have I left out anything? I don't think so. Now, a couple of questions I had. Whoa, let me just check to the left here. Inbox. Just a refresh. Give me one sec. What is this? Evite. Oh, I got an Evite. Yeah, okay. So that's cleared up that. Oh, there's a problem. All right. All right, here we go. I'm looking at this in a particular way. I want you to go to the dollar. I want to go to dollar TRCCI, and that is this huge declining commodity, Thomson's Reuters Continuous Commodity Index monthly with a Chapman Wave notation. And what we're looking at is this trend line right here, just got nicked. But the month isn't finished. We've got another few hours to go. And so far it's closing nicely above this downtrend line. And that says the commodity index could rally from 370 to 396s, the 9-period exponential moving average. And between 396 and 416, you could get an arch formation that corresponds No, I'm not going to talk about it. I want to do my homework on the weekend. I don't like to just make arbitrary statements. I'm going to say, which could correspond to something that's very important. So now let's do this. I wanted to show you, see, here's an invert. This is just a regular Chapman wave Roman candle, but a green one, not a red one, but a green one. And that's a positive one if it can close above the high. This is the commodity monthly index at 323.20 in December of 2008, and then pull back, but don't close below the body low. In this case, it's the opening price of 349, and that's exactly what happened here. Then it started a beautiful move to the upside. Now let me show you something more interesting, and it was a great question I had, and I'm going to try to find this right now. So Greg asked about the inverted candle, the Chapman wave inverted candle. I'm going to DE, which is deer, because that's what I wrote down. And what did I write down? DE, find it. Monthly 886. This is 1980. I had to go back to 1986. It was a very good year. 86. Right there. You see that candle? 86. There it is. That is an inverted. I would have liked the wick to be longer. I like the wick to be at least as long as the body. This is the closest I could get after hours of going through these charts. That is an inverted Chapman wave Roman candle. And in this Roman, and I must apologize right now. He did send me a couple of examples, and for some reason I got so busy this morning doing a whole bunch of things that I had no chance to go back to it, because I first wanted to find my examples so that I could actually give the example. This is the closest I could get. Back in August of 1986, Deere and Company, that's, tractors, etc., made a low after going to a peak A, B, C, D. That was in September of 1983. Comes back down and makes a low. MACD stochastics start turning around. Now, the rule of thumb is that at any point, if you start to trade into the middle of that candle, now I know that on a shorter term basis, I've spoken about this candle many times, and my rule of thumb, there's another one. Look, that's actually the best one, but that's not at the low. I found tons of these one bar after a doji candle. So that's not what I was looking for. I was looking for the exact low in a monthly major decline. I would say a major decline from almost $8 down to $3.60 or whatever this is, $3.58. That's a major decline. That's what I was looking for. So the rule of thumb is the same. You start to trade. In this case, I would put it at about a week, one whole week in a monthly chart, into the middle of this candle. There's a real good chance you're not only going to take out the top of the candle, but you're going to go above it. Then there are a whole bunch of strictures, rules that I look at, because you need to close above it, then you need to come back, but you can't go back into the body. You've got to move high. This did exactly that. So here's my first example. You can write it down. And the first example of inverted Chapman wave Roman candle is August of 1986. If you've got charts that go back that far, I love TradeStation. It really goes back as far as you want most of the time. Okay, the next one is Pfizer, PFE. The other one was DE, was the symbol. This is PFE, Pfizer, pharmaceutical company, one of the largest. Look at that Roman candle. I'm going to talk about those today as well. See, there's a little bit of a Roman candle inverted, but that's not what we're looking for. What we're looking for is back in March of 2009. So here we go, March of 2009, right there. Right there. That is an inverted Chapman wave Roman candle. It's not one of the better examples, but it's the closest I could get. It's perfect in terms of the visuals, although I would have liked the tail to be a little bit longer, but you've got an equal tail to the body. Okay. What's the rule of thumb? The rule of thumb is at a low. This is actually the rule of thumb in any case, but at a low, this is what you want to be looking for. And since it happens so rarely, you're not going to see it very often. Go into the middle, start trading in that, and you should at least test the top. If you break the top and close above it, you want to close above it for 2 out of 3 sessions, and you don't want to be trading back into the body because that could make an H pattern for a retest of the low. And this is exactly what it did. After a major decline, and the major decline was, say, back in 2004, at let's call it $39, it goes to $11.62. I would call that a major decline. Okay, so you've got that example. I'm circling it, and I'm saying it again. It is Pfizer PFE, monthly chart. Go back to March of 2009. When the break comes up, I'm going to try to quickly skim through the emails to see what was. He did send me a list, and I'll try to find those, and we'll talk about that. So I hope I've cleared up what I'm looking for at a low, a major low, with an inverted Roman candle. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, if it could be Friday without a little rant here. So the Boston Globe, the MBTA, this is our commuting rail system here in the local in Boston, and it is abysmal. It has always been very bad. But if I say bad, I'm actually giving it a compliment, because last year it was so pathetic it couldn't even run half the time in the wintertime. So what do? They got I've spoken about this for a long time. I keep saying politicians always choose the wrong issue and talk about the wrong reason for the wrong issue. So we've got politicians talking about the 1%ers. You tell me now. Now, these people have legitimately got whatever it is, I suspect. So I'm ranting about the makeup of the whole package initially, MBTA employees who will make more than 100,000 this year. The Boston MBTA, which kept breaking down all last, this is what I wrote, not what they wrote, which kept breaking down all last winter and is notorious for extremely poor service, has 1,551 of its employees, 30% earning over 100,000 a year. One maintenance worker got $327.6 thousand last year. This is a maintenance worker. This is not a scientist at MIT. This is someone who's doing a job which is part of the curriculum, just part of everything. That's good. I mean, it's a maintenance worker, maybe highly skilled. You got to give, whatever credit. I'm giving him credit. But I'm not giving him credit for getting 327.6 because if you're working overtime, there's something wrong with these figures. There's something wrong with this package. Now, I'm not complaining about the actual prices, although I'm complaining about the actual prices. Typical annual pay is $80K. So I'm saying it is not just the annual pay for taxpayers, it will be the ongoing pension for the rest of their lives. And of course, they always take the best 3 years, so they work terrible overtime, whatever it is, or they put down the statistics that they theoretically worked overtime. And they get the best three years, right? And that's for life. That's what the taxpayers have to pay. Now, I tell you, and I've been suggesting this for years, if that is part of the contract, then they are the real 1%ers. This is the union. This is forever what the citizens of Massachusetts have to pay. Something is desperately wrong with this system, especially as every year the MBTA goes more and more broke. What layperson out there, you tell me, can get a guaranteed, safe $80,000 per year without having millions in savings these days? Got that rant out of the way? I'll just keep repeating it. I'll keep repeating it. Why? Because nothing's going to change. They're going to get their increase, and the layperson is just going to pay and pay and pay for terrible service. And that's, again, the union fault. Oh, now I can talk about General Motors. I'm done with those charts. General Motors. So I go to the show 3 Fridays ago, whatever it was, and I open the door of every car from the Chevy, the front door. I always like to sit in them, et cetera, and I open the door of the Chevy, and as I'm opening the door, I feel something scrape my hand. I don't worry about it too much. I go to the different General Motors products. I go all the way to the Cadillac, their premier car, which gets the most horrible rating in reliability by Consumer Reports, right? I'm sitting, I think I spoke about this, I'm not going to go through it again. I'm sitting in the back of the top of the line Cadillac. There's a guy in front of me from Cape Cod, got his leather jacket on, is an older gentleman, and he's with his friend. And I ask him about the Cadillac. So let's just leave that for a moment. So he gets out, and I go into the front, and I open the door, and I suddenly feel something scrape my hand. I look, and what it is there's a little piece of trim. And that trim, that little chrome piece of trim on the front door, has a little plastic cap. Now, some of you might remember about 3 years ago, I was at the Natick Mall, and they had the brand new electric Cadillac. And I go in the car, and I thought, okay, they've improved this, improved that. And I said, okay, I always like to move the seat in a certain position. So I put my hand to the left for the electric button, and there's this little piece of plastic. I thought it must have been something that somebody dropped by mistake. And I looked, no, that is the lever. They're charging 75 or 80 grand for the car, and this little piece of plastic that you wouldn't give to your grandkid to play with because it could break off and, whatever. So, okay, back to the story at the show. Get into the Cadillac, and I think to myself, this is, something's wrong. I get out again, and I put my hand on the door. Then I look, and I see this little piece of plastic. So here's the story. For 0.001 cents, I don't know what it cost them. It can't cost them even 1 cent. It must be just a fraction of a cent. They sent it off to one manufacturer, and yes, the Chevy was a little bit rougher than the Cadillac, but it was still rough. When you run your hand on the side of a car that's costing a certain amount of money, actually any car, it doesn't have to cost whatever it costs. I do not want to feel scratchy corners, certainly not in a car up in the 70 to 80, 90,000 area. Hey, That's General Motors. They still haven't got themselves corrected. They still, and I blame the unions once again, besides the CEO. Those union guys should say, we're not going to work on junk. We want the best of the best, and you better do it because this is our jobs that you are sacrificing. Wow, got that out the way. All right, let's go back to our charts. I'm done. I'm settled. Let's look at, I wanted to look one more time at IBB, because it's gone down close to the 253 level, and that's going to be the big test. And look at this candle. Now, there's the Roman candle. It started to trade below it, and then it had a big rally, but it didn't go very high, but it had a big rally in terms of percentage gain, 280 to up in the 340 area. Unfortunately, it's closing the month down in the 262 level. That 262 is so close to 253 200-period moving average. There has to be a rally, because fund managers are just getting out of these things. One by one, earnings come out, nothing happens. So I always like to say, in sectors, in the marketplace, you want to know where the theme is. And I spoke about the theme for over a year now. I've been saying the theme is not going to be biotechs. And when it changes, because I think this is a major, major top, it's going to be a long time before there's a major rally back to highs. And please be careful. I repeat that. Now we're getting really close to some kind of an oversold rally. Now, it's not the kind of oversold rally that we're looking at if you go to the dollar, TRCCI, because that's different. That's an oversold rally that is purely technical, because there's a flattening out of the stochastic in the monthly chart, flattening out of the MACD. You see the histogram, the distance between the fast-moving average of the monthly, the green line, the monthly moving average, the 9-period differential, and the slow-moving average is slowly getting, it's decreasing, and because of it, you're getting a rising histogram. It's still at -4. So that's what I think is helping it. And I would not be surprised to see that the commodity that company that we just bought this morning shows signs of the same kind. It isn't as strong as this yet. It's only just as like its first little bounce even. But it's showing the same kind of signs, and it's also targeting the 9-period exponential moving average. And I suspect there's going to be a rotation. Why? Because if you look, China has just put in billions into their economy, and I suspect that that's what's going to help the copper rally a little bit more, and you will see other of the commodities move. I'll be back. Basil Chapman. Be right back after these few announcements. Dow's up 186, S&P's up 19. Now I can take a deep breath, relax, have a cup of tea.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, I'm back. Had my sip of tea, all relaxed, just calm as anything. We've got 59 round number high, very unusual to have the UVIX, the ProShares Ultra VIX short term. Had subscribers say that they had still kept the short position from when we went short the volatility index the day of. I can't remember offhand. Yeah, of the day after the high, I think it was, and we got stopped out, and then it turned around and came down sharply. But I had a couple of people stay in that position. My recommendation to them was to take at least 2/3 off, keep 1/3, and just keep it as a kind of a core position and see what happens. Well, the UVIX, so we had a different instrument. UVXY trading at 39.94, down 2.10 right now, is under the 9-period moving average. And the question was, could you pull the wave count on the UVXY? Yep, UVXY is making, as we speak, this is leg B to the downside. Day is young. Remember, we're coming off a major short-term low, and that means that there's still a lot of people wanting to short. Now there are a lot of people that are interested in buying, but the buying is so selective in different sectors that it isn't your usual kind of buying. That's why I'm saying I love the makeup of the Dow at this particular point. It's just telling me so much that would have been lost otherwise. And in the weekly chart, it's got a brand new leg A and a B up, and it's making a peak B as we speak. So UVXY, MACD is crossed negative. I've got a down arrow at a peak F. That's usually good for a deeper and longer decline. But most importantly, we're getting to an area where there could be some bounce attempts in the 39s, and you need to see this trading decisively in the 36 to 35 area. I prefer below 35. Maybe that's not going to happen right now. But you need to see it in the 36s for some comfort. But meantime, keep your position, because I think this is going to be going lower. I still want us to get to at least a D, a leg D, in the Dow, and then we'll start to assess whether or not there's much more to go, or we're going to start back to the downside. That was a question I was asked email. Now the next question is the dollar and the euro. Okay, let me just do this for now. The little mouse is jumping around. EUR, USD. Must check the time. I don't want to run out of time. Yeah, the euro is making that arch formation that I drew in. You remember I drew it in right there. It's making another one. I suspect that the euro is going to have support at the 1.07 area. So that's what we're watching. I'm looking at the dollar, and let's see what the dollar is now. Did it make that leg to the upside? Yeah, no, it hasn't. 99.78. Oh, my, 3 cents. 78. No, 4 cents. 4 cents, yoo-hoo, dollar. Well, the days, yeah. Right, I'm back. I'm back. We can hear you. Good. I just waving my hands around. It's a very exciting day. I must have hit something. I did. Okay. So now we're back, and the dollar just missed it so far, missing it. I wonder if it'll still do it today. Maybe it'll do it over the weekend, maybe going into Monday morning. We'll see. So this is very important. In terms of the questions that I had, so the dollar I've just done. The other question was the USO. I was asked about that for 3 days, and I didn't actually get very much into the USO. I did talk about crude oil. USO has had a very nice move to the upside. It is the United States Oil Fund. It's trading at 9.44, down 26. We were trying to get in, and then I said no. We tried at 8.50, and we missed it. It went to 8.54, and we missed it on the 25th. And then I decided, you know what? I'm going for something else. I'm stepping back, and I'm saying, look at other areas. And when I did that, I said, you know what, crude oil might still have a problem. I think the gold, we got a gold stock, is acting quite nice. Oh, I shouldn't say that. Yep, it's acting very nicely. And so I'm getting a mix of a portfolio here, but for the very first time in, I don't even know how long, I'm into the commodity area. But I think I'm going to try to leave crude oil just for the moment. I think there is a play. But I want to see how this pullback, how 910 to 890 holds, or even if 920 is a base and it suddenly spikes higher, I'll start to get very interested. So I hope that helps the questioner. Just a reminder, XLE monthly, and then I'm going to, as I put this up, I want to go to our first caller. We've got Brent in Martinez. Just 1 second, Brent. I want to look at the monthly chart of the XLE. Yes, the XLE monthly chart has a 9-period moving average of 58.20, and it's trading now at 56.69, having made a low just the other day at 49.93. So this I'm watching really closely. I think at this particular point, I don't know if I want to buy into the XLE, but I'd like to see the next pullback. So I'm going to go to Brent Martinez. Brent, how are you?
Doing very well, Basil. How are you today?
I'm well, thank you.
Good. Happy to hear that. I have another one for you. This is a new one. I'm not sure we've ever looked at this. Maybe you've had Steve look at it. It's the company is Fairmont Central. It's kind of similar to that Silica Holdings that we've looked at in the past.
Right.
They do same type of the fracking stands for. So
this is Fairmont Central Holdings Inc. Central, I guess. Central Holdings Inc. And they do fracking. Okay.
Yes.
So. This is really interesting. First of all, it's trading FM for mother, SA, trading at 238, up 14 cents. This is a nice pattern. This is a pattern that says to me, because there's an IPO, it only came out in 2014, went to the 17 area, and then plummeted down to the most recent low of 1. I would say 17 to 1 on the downside. I would call that a little bit of a waterfall cascade. And it did hit a beautiful round number, $1 the other day. You know what? This is one of those that I would put into the category of a little, because the history is not, I don't have enough history. I do have enough data on the daily to say this is a fabulous move. That the fact that today it went from yesterday's high of $2.69 to today's low of 219, and held this moving average. I keep forgetting now. This is the 50, I believe. Yep, the 50-period moving average. Yeah, that's good. The 120-minute chart, just a quick look. Let me just see this. A, B, C, D, E. Yeah, this deserves a little bit of a pullback, and it's made a kind of a rectangle formation. I think the trading range right now is between 207 and a breakout of 269, which says about 272 would probably be the upside resistance just on the very near term. I like it, but I'm going to say that for me, I'd put it into more the speculative category, only because I don't have enough history to say what has it done other times. But the candle, the little doji, I love this. There's that tiny doji candle from last week. Big candle this week. This says that it should move higher, and all you need to see is if it even tests $2.80, there's a good chance it'll try for the 303 level of December. So I like it, and I think you've got really good support. Just a little lower down, but I would not add to it yet. I'd actually try to give this one another week. Hope that helps you.
It does. Thank you, Basil.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back, and we're going to go to our next caller. We've got George in Boston. Hi, George. How are you?
Hi, Basil. Thanks for taking my call.
My pleasure.
Whenever I go up to Hampton Beach, I look for those PKF waves to ride them all the way into shore.
Oh, yeah. So this is up in New Hampshire, right?
Well, when I go up there.
Yes, yes. Now, I had a great experience at Hampton Beach a long time ago with my son and my daughter. This really is a long time ago. And we went up there in August, I think, and there was this incredible storm down south. There were tornadoes and all sorts of things, and it made the water extremely warm. I hate cold water. I love warm water. And we stopped on the way back from, I think it was, we're up north there. We stopped at all the beaches on the way down, and Hampton Beach, the waves were fantastic, and the water was warm. Even in Rockport, the water was warm. So, yes. So, George, you wanted to talk about candles, right?
Yeah, I listened to you earlier. You were talking about those inverted candles on Deere and another stock. And I want you to look at the monthly on the Dow and the SPX. Went in September of 98.
Yes.
And also, I think it's in October 2002.
So the candle that you're talking about is what I call the Roman candle, right?
Right.
So the one that occurred in October of 97 wasn't a Roman candle, because the Roman candle has to look, let me see if I can just draw it now. I'll draw it like this. It has to have the body, quite a long body, and then the wick at the top is just enough to light the candle. You know how you got that little tiny wick at the top?
What about,
and then
October, though, 2002?
That's different. Okay, so now what we're looking at, see, there's the candle, and there it is. Nice body, and then I want a nice long wick, and then it closes about halfway or a little bit better than halfway up. Okay, so now if you look, the perfect one was in 2000, here it is. There were a couple of them, but the last one that we had was in November of 2007. So let me show you. I've even typed it in. So November of 2007, right there. And then it happened again in January of 2008, exactly the same candle. And then the most important one was the candle of October of 2008. That's where the bank crisis really started to get going. So in each of those cases, you see the nice long wick. When the candle started to trade, in halfway, it collapsed and went below the low bar. That's the reason why I'm saying today's close for me is so important, because we could be repeating a second candle, a Roman candle, one that I've actually, I don't recall ever seeing it quite like this, that a few months later, you still haven't broken 15,370. But there's the same candle.
The inverted candle of March of 09, wouldn't that be the type of candle you're talking about, or no?
So in March of 09, this is a very interesting thing. Let me just get there quickly before you don't want to run out of time. You see, this is not a candle. This is not a Roman candle. The two candles before it had kind of inverted on January of 2009 and February of 2009. Yeah, they were kind of looking a little bit like it, but the wicks weren't long enough. But there was a sign that they were close. But the low that was made in...
Are you looking at the monthly of the Dow Jones, the DJX?
I am.
Okay, but the candle I'm looking at is that you have a positive candle, right?
Yep.
In March of 09. It goes down to a bottom, right?
Yeah, but you see, the candle that I'm talking about... So, you want, I'm going to ask Al if it's okay. Can you call me on Monday and we'll talk about it again?
Okay.
Okay, and the other thing is, if you want to send me an email so that I can review what it is that we're looking at, so that I can go right to the point. Okay, have a great weekend. Call me again, George. I really appreciate it. Folks, Dow's up 238. Nice action. Legs C up in the Dow. We'll be back on Monday. Have a great weekend. Check out my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.